following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. If you haven't had a chance to check out our newest show, the Futures Options Roundtable, I encourage you to do that right away. As soon as you're done listening to this program, of course. Don't stop the Option Block. But once you're done with the Option Block, tune on in to Futures Options Roundtable. You can find it in all the regular outlets on the optionsinsider.com, iTunes, Stitcher, Aha Mobile, wherever you get your shows. It should be there. If it's not, let us know. We'll make sure you have access to it. A great show, taking kind of some of the fun stuff we do with Option Block and taking that and applying it to the futures options realm. I know a lot of you guys have been asking us to do something like that, so we're excited to finally have that show kicked off. We got a few more episodes in the can. They'll be coming out to you shortly. Check it out, the Futures Options Roundtable. I think you're going to like it. And joining me on this first post-shutdown episode today, we have the usual cast of characters, starting off in order of proximity with the man holding down the Viceroy chair over there in Options Express World HQ. You know him, you love him as good old Alex Jacobson. Mr. Alex, welcome back to the show, sir.
Hey, Mark. Good to be back. And as we were saying, an interesting day. We saw Washington, pardon me, actually try to talk the market down today. That's a clear demonstration of leadership on their part.
Yeah, this was not a good day, I think, for anyone involved today. I think we'll have plenty of time to get into all that fun stuff in a minute. But first, let me introduce the man beaming in all the way from the great state of Maine. It's been so long since he's been on. His cohort, his better half over there. I'm not sure who's the man in that relationship. I don't even know. Mr. Sebastian has been hogging all the spotlight on the show for the past week and a half, but now he's back. The rock lobster himself, good old Andrew Giovinazzi from OptionPit.com. I didn't mean to insult you and your life partner there, sir, but welcome back to the program.
You caught me off guard with that one. It is always great to be here, and you know, Mark, if he does not get to go on radio and start to talk, he does go through a little bit of withdrawals, and it's a very sad sight. So I had to put him back on the air. Had to do it.
Yeah, he's been seeing the numbers for Option Block like all the rest of us and saying, my God, I got to get back out there. The masses are certainly, maybe there's a sign. Maybe Sebastian's been off for a while. The numbers are taking off. Maybe I should see that as some sort of indicator. Go ahead. Take a break for a little while, Mark. I'm just kidding.
He does like his audience, though. I am sure, though, Mark has been part of the reason for the huge success of the Option Block.
Yes, the option block as a whole doing ridiculous numbers these days. The network as a whole really just lighting up the tape across the board. You know, when we look back to when we first started this thing, it was just one show, the first options podcast. It really was just an ancillary way to deliver the website content from the optionsinsider.com. No one else was doing options podcast. This was pre-iPhone. We really had no idea if there was an audience for this, if there was a market for it. It was very, very tepid, very, very trepidatious first steps into these waters. And now 6+ years later to see it just grow and expand to all these different shows covering all these different topics. I don't want to sit here tooting our own horn for too much, but it's certainly looking back at the humble origins to what this medium has become, let alone the radio network, but just in general what this medium has become and how we've been able to take advantage of that. It certainly has been fun to watch, and certainly great to see that you guys this is clearly resonating with you guys, and you're liking it, whether you're commuting, listening, working out, however you get our stuff. We're glad that you're enjoying it. We love bringing it to you. And speaking of bringing it to you, it's time to dive right into the trading block.
The trading block.
And just in time, it's as if his little birdies had clued him in that we were starting the old show. Better late than never. We are joined right now by good old Uncle Mike Tusaw, beaming in from the hinterlands of Chicago, a.k.a. St. Charles, Illinois. Uncle Mike, welcome back to the show, sir.
Hey, I hired minions, and I'd recommend you do the same.
Yeah, you got those purple guys running around. They're kind of dubious. I don't know if I trust those guys either.
Hey, after dealing with the birdies and I had a falling out, I'm telling you, Mark, minions are the way to go.
Just keep feeding them that jelly and they're happy, right?
Depends what task you need them to do.
That's true. You can tell who has the little kids on the panel because we've all been to see Despicable Me 2. And the rest of you are probably scratching your head saying, what in God's name are they talking about? Speaking of what in God's name are they talking about, Alex, you alluded to it there at the top of the show. Just a weird, wild, wacky day on the street. Everyone seems like they're being a bad actor in this whole kerfuffle. We are, of course, recording this on Thursday. Someone wrote in with a question, so I'm going to say today is Thursday, October 3rd, when we record this, just so you know. We'll get to that in the listener mail block in a little bit, but today is Thursday, October 3rd, so we're 2 days in, roughly, to the post-shutdown era, our first show, post-shutdown, post-furlough, whatever you want to call it, and a lot of crazy stuff is happening. Of course, looking back to our last show, we were recording that right going into the teeth of the shutdown, the teeth of the deadline, and we were talking about how we saw just a flurry of last-minute people saying, you know what, this doesn't look like this is really going to end very well. Let's put on some near-term downside protection, and just an explosion of love for the SPY and the SPX, 168 and 1680 puts in the weeklies, just devouring up both of those strikes. And what we've seen now, 2 days later, it's been kind of odd. I think a lot of people were leaning, clearly from the paper flow, leaning on this was going to take the market to a downturn. What we saw was a pretty pronounced rally immediately after the shutdown. We saw a little bit of vacillation, and then today, of course, as Alex mentioned, people were talking down the market. The market took a bit of a beating early, and then kind of rallied back a little bit from the worst parts of the day. And now, of course, 2+ days later, 2 full sessions later, where are we? We're right back where we started. Those 1680 puts, 168 puts are now about 2 points on the money. So for all of that Sturm und Drang, we're back right essentially where we started. So maybe, Mr. Alex, we'll start with you. What's your take on all this crazy drama we've been seeing? I mean, the president literally came out and said that investors should, quote, be concerned. That's something you don't usually hear coming out of the White House. We have the Treasury Secretary saying this morning, warning in a press release of unprecedented default and a recession that would be worse than the financial crisis of 2008. A bit histrionic. Would you agree, sir?
Yeah, absolutely. And in fact, our flow today, and I'll talk more about this in the Xpress Block. So in talking to the trading desk today, one thing they pointed out was we had lots of two-sided flow today, lots of day trading, and the 3 instruments that got the most traction were the E-mini S&P and both Apple and Tesla. Now, Apple and Tesla today both traded like $11 and $12 ranges, so there were lots of opportunities to trade. The curious thing, and this is the thing that Des pointed out to me, was it's rare that we see this much kind of two-sided stuff intraday. We either see people positioning or we see people trading on a shorter term basis, but they were visibly aware of just round trip trading today, which is a bit unusual. But I think it's part of the news cycle. I think it's part of what we're seeing, and people are trying to trade the sell-offs and then trying to buy the rallies. So it was a curious day in that sense.
Yeah, that seems to be mimicking essentially what we're seeing in the broader market as a whole. Two-sided paper, people don't seem to really be able to make up their minds one way or the other what this means for them, for their portfolios, for the market as a whole. We saw rallies, we saw sell-offs. We're essentially unched since going into the initial shutdown, and it sounds like the paper flow at OX reflects that. People are on both sides of this. You have days where the different parts of the government are clearly trying to talk this thing down, and yet the market is kind of resurging a little bit in spite of that. So odd stuff across the board. Interesting as well. Certainly not the one-sided drubbing like we saw a couple years ago in 2011 and some of the other kind of paper flow where everyone was trying to fade it, and then that didn't work out so well, and we saw just them getting slaughtered. Essentially, if you have those puts on, they were the 168 puts you were talking about at 1680. Those are essentially a little bit in the money. You're pretty much back to where you were on square one. So that hasn't really been any sort of one-sided drubbing, at least not yet. We'll see. Of course, from a vol perspective, all this vacillation, all of this volatility is being reflected in all of our various metrics, including the much maligned, much ballyhooed VIX cash breaking through the 17 handle, actually over the 17 half handle today, closing today at 17.67. So perhaps we'll start there, Signor Giovinazzi. That's really not too unexpected, I don't think, given what we've been seeing in the marketplace. So what kind of read have you been getting from your clients and your mentees? Are they kind of like the OX customers? Are they all over the map? Are they looking for something specific here? What are you getting from them right now?
Well, we've tried to keep people from selling too much. We have our book is we're long Vega in underlying, and we've been slowly adding a couple of VXX puts here and there as the volatility climbs higher, kind of trying to lock in the volatility on the gamma of our other positions. But for that, we've mostly been telling people stay away from the short gamma. Like a lot of people like to do butterflies and short-term stuff, and we closed basically yesterday. There's just too much. We thought there'd be a deal. Maybe, the market rallied a little bit, and we've seen that head fake. It's essentially, I think, a repeat of December to January, 2012, 2013, when we had that insane where those guys just, they just can't come to a sensible deal in a relatively short amount of time and compromise. Vol actually VIX traded almost 19 today. For a while there, I thought we were going to see 20. It was clearly on its way until the Boehner must have looked at the tape and said, man, I got to say something because the market's going to just keep going down to zero. So from a vol point of view, we can easily go higher. We can easily go lower. I think we'll still see some extreme realized we'll just call it average true range type volatility intraday. You get a budget deal. We could have, 1.5% relief rally. VIX trades 14, something like that. It would be pretty dramatic. But until we get that, I just expect more of the same. I think we'll see a higher VIX before the deal is done. It'll trade higher than 1871. We have some bullets, basically backspreaded kind of the VIX, bought call spreads, bought puts. And you just kind of wait till see which one sort of takes the lead. And that's what we're doing. We're waiting. I sold a couple of call spreads today in VIX, just unwinding. And we're waiting. But I would stay away from iron butterfly, stuff like that, where you're really short a lot of at-the-money stuff. Kind of look at more like iron condor, stuff like that gets you far away from the strike. You're getting great prices for premium. Alex is probably OX, Idea Hub was going ding, ding, ding today probably for at some point. So you just have to be cautious because the market is going to move 1 to 1.5% in a heartbeat, literally within 20 minutes. That's how I see the movement on almost any solid piece of news, either good or bad, that comes out of this. So you're kind of, again, you have this government has put the market as a whole into like a binomial. It's like a biotech announcement. It's earnings. It's ridiculous, and that just shows you, Mark, you traded, Mike too, all these, Alex, you saw for years, nobody cared what the government, budget impasse. Yeah, whatever. Never even put a ripple in the market. And the way these guys do it now, because the government is so involved in the marketplace, I think from either TARP or QE or now, with such a high deficit, the budget process is now part of, major instability for everything else. So it's going to make the VIX higher. It's going to make realized volatility higher until it doesn't, until it goes away and they kind of start to, get sort of what I would call a somewhat in the middle path, let's say.
Yeah, the closest analogy I could think of, at least in my own trading recollection, would be back to the post-November 2000 time frame where we had Bush Gore, and it was a completely binomial event. One day it's Bush, one day it's Gore, and the volatility shot back into the marketplace. The market would rally, the market would sink. It was one of these types of scenarios. Hopefully this doesn't play out anywhere near as long as that one took to play out, but it was there was a lot of back and forth trading, a lot of interesting stuff. This type of environment, a little bit different. You're right. You have to really be an iron constitution, A, and B, be a very, very skilled trader to really want to get aggressively short gamma here, because this thing could take off in a heartbeat. On the flip side, if you're long gamma, if you're long premium right now, you're essentially back to even. Hopefully you're a pretty skilled scalper. You certainly haven't really experienced much in the way of decay over the past few days, so that's been working in your favor. And hopefully you've been sophisticated enough to scalp some of these aggressive swings we've been having in the underlying. If you're doing that, I think you're doing fairly well, and you're poised, of course, to potentially profit if we do have one of these another aggressive moves to the upside or the downside, however this thing ends up shaking out. Mr. Tusaw, I know this probably was a pretty busy day for you as well. A lot of clients on the horn on a day like this. Of course, this is the kind of day too where guys like you who have a little wherewithal in the put department tend to shine. So this might be actually the kind of day you may actually welcome as just a way to have those conversations with the clients and say, hey, look, here's some of the value added we're actually bringing to the table versus guy X down the street.
Yeah, definitely. Obviously, you never want people to lose money, but I've built a lot of business on people that have given some money for us to manage, and then they leave it at another advisor who has it in mutual funds, and then on days like today, the company grows, or at least what I'm managing grows. So yeah, I'm actually short gamma myself right now, technically, but I want to explain a little bit about how I was short gamma. And said I totally agree with you, Andrew. I wouldn't necessarily purposely be short gamma just for the sake of being short gamma. I think that would be insane in this market. So I'm in total agreement with you. But I want to explain a little bit about how I'm managing a position with which I'm in right now. For the section of the portfolio that I'm doing, and I've talked about the diagonal spread with SPY a lot on the show. I mentioned it, I even think on Monday I talked about it, and how we went to cash when the SPY went below 172. And so Monday or on Tuesday it came around, and so we rallied a little bit. We're at around the 169 level. And so by the rules with which I had, because of the fact that I had to get back in, which I don't regret by any means, but this is for a bullish section, a long-term bullish section of a client portfolio, got back in, long the March 160 call, and then I was short the October weekly 169.5 call. Overall debit for that trade came out to be around $12. So with that, obviously today happened, and got out of the 169.5 call for 11 cents. I did something. And with that, what I did was by getting out of that call option, because of the fact that implied volatility increased the way it did, it made it so that the sting really wasn't all that bad on this diagonal spread. This is one that this diagonal spread is what's been the main market participant for a vast majority of my clients to the market upside for the last few years. And then just what I want to point out today is that when we got back in on Tuesday, when SPY was at 169.25 approximately, and now it's at 167, 167.62. I see is what we closed at today. So SPY is down more than $1.50. Just looking at my basis for it right now, it's at 1167 because I sold the October week 168 call today. And currently the spread itself, based on the close, it's trading at around 1130. So we're down 30 cents. The market is down $1.50. This is one where, and obviously if the market shoots up tomorrow, what I have to manage is the market going through the 168 call. But what I'm banking on, or what I'm hoping happens, if that does happen, is that we have a drop in implied volatility to where it'll benefit or not hurt too bad on the 168 call. So if you are going to play the gamma game like I'm doing, you got to stay glued to your computer, folks, because it was a busy day today, to say the least.
And there were, of course, a few hiccups in other parts of the market that are maybe worth discussing. One of our more popular names on this show, and I know over at OX and most brokers these days, is Tesla. They finally had the temerity to sell off today on the heels of a battery fire, a car fire, one of their names. They were off 6% at one point. They closed today down about 4.2%, and that still only brings them down to 173. You could see you could see all the bears just gnashing their teeth, saying, "Finally, this is it. Finally, we're going to get a chance to get some of our short interest and see this stock take a bit of a downturn," because they've been championing the bid for that since the stock broke 50, and or certainly since stock broke 100. And the fact that it only car fire and it still only got down to the low 170s, I think probably was disconcerting for a lot of them. We'll get to that probably in a little bit in the Xpress Block of how much Tesla was lighting up the old tape over there. Let's see. Really quick, I think there's a big story from an options perspective. We see a lot of mainstream media covering this one. Our phones been ringing off the hook the last couple of days with reporters asking, what about this whole Ackman, Icahn, Herbalife debacle that's unfolding? And I kind of just have to laugh at these things these days. The notion that this is a big story, that this guy who had a huge short position got short squeezed to death, and then turned around and covered 40% of it with options, OTC put options in this case. That's some sort of big story. It's kind of interesting. This guy should have done this ages ago. And I'm still amazed in this day and age how many of these guys, it seems like a lot of these old school guys still do this. They still employ the old school mega short position when, in pretty much all senses of the word, except for, I think, the imprimatur and also some of the leverage you can bring to bear on the stock. The puts are definitely the preferable option from a capital efficiency perspective, from a nuanced risk management perspective. They should be using these puts all along to begin with. But c'est la vie, big story in a lot of the mainstream media that, oh my God, Ackman had the temerity to switch out into puts. What's he doing? My favorite, real quick, they had a quote on CNBC today. They said, what did they say? They said he reduced his short equity position by more than 40%, replacing it with over-the-counter put options, which in their disclamatory, or should they in their definition portion of the thing, they went on to say a type of long-term derivative. So apparently all OTC put options are leaps. I didn't realize that. But c'est la vie. I was probably asking for a little bit more nuance from CNBC on things like this that I could reasonably expect from these guys. Really quick, Uncle Mike, Andrew, anything else that really is lighting up your tape today? Saw Apple moving a little bit, Uncle Mike. We saw some movement in the metals as well. Anything else lighting up your particular tape right now?
No, just the macro market in general is the big tape lighter.
And you know what's funny? A year later, the euro is a bastion of safety. That's all I'm going to say. Right? Last year at this time, right? The Draghi, we're going to defend the euro. I mean, Spain seems to be doing better. Greece, I guess but they all got sort of the same issues. Right? We just got a bunch of guys that just can't sit down and basically balance a checkbook. That's what our problem is. Got plenty of income, just can't balance a checkbook. Okay, basically idiots. Those people actually have like really bad economic systems and a lot more debt, and somehow the euro is thriving. That's all I gotta say.
I was just going to say, if we had all been trading vol contracts on the euro all this time, all of us would be retired to our own private islands right now. It's a shame.
Funny.
It's a shame. All right. And that is going to do it. A lot of other things, CBOE glitches going on, stuff like that today. But really the big story, of course, is what's going on in D.C. So with that said, I think we're going to keep on rolling right into some of the individual little names we saw picking up on our own respective radars today from an unusual activity perspective, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. Once again, if you'd like to play the home game and follow along with us and read some of the alerts we're not going to have time to get to today, like some of the little ones like Away and some of the other ones, or some of the smaller names, then by all means you can surf on over to theoptionsinsider.com. Click on the Unusual Activity tab. You can find all the detail on these alerts we're going to hit on the show and much more, so you can find unusual activity until your heart's content. And I know a lot of you like to do that. So we're going to kick things off here in the old Odd Block today with CVA. This is Covanta Holding Corp. They closed today $21.49, down about 0.5% or so on the day. This is the name that does, about 600, 700 contracts a day. And they did about 3x that today, about 2,200 contracts going up in CVA. So a pretty aggressive day from a volume perspective out there. And what we saw was pretty much all of this paper, except for, I think, 100 lot or so here. Pretty much all of this paper was put up in one massive long-term block. We saw 2,000 of the March 2014 22 half puts going up for about $1.45 2,000 times. This is the strike that only has a little over 1,000 contracts open on this strike. So this is all clearly opening paper. This looks like, this looks like here we have an opening put seller here with this very round lot of 2,000. Of course, an unusual trade in that sense, because we don't typically see these guys drawing lines in the sand on in the money puts, these puts being exactly $1 in the money right now. But looking here at a little chart of CVA over the last 6 months or so, I don't know, it seems like a bit of an aggressive line in the sand. What say you, Senior Andrew, about our friend here and his CVA puts?
He's selling puts at the top of the range, Mark. I don't know how you deal with that. I mean, he wants to get long, and the business of Covanta is an owner and operator of infrastructure for the conversion of waste to energy. Okay, I don't know how much more of a company that this administration is going to love for the next 3 years. And in my experience, you tend to want to buy companies that administrations like. Like during the Bush years, you bought oil companies. During the green years, you buy all the green stocks. And this kind of looks like a green stock to me. And somebody's just saying, you know what? I'm going to buy more stock. And whatever the deal is, they want more. I don't know. From a point of view, like you sell the puts and you sell the stock, it's kind of a goofy trade. So I just think there's somebody's getting long. They maybe had a long position. They want to get longer. That's how I see it. If it adds to the open interest. So,
yeah, it is a bizarre one. March, an odd choice as well. A lot of weird factors. Strike month across the board. You said you didn't see any stock going up with this, right?
No. So I don't know. That would just not be an odd block trade. That would just be a dopey block trade to sell the stock. And
we've seen it. We've seen it.
We have seen it though.
In the money puts and then some stock to go along with it. Why not?
Yep.
Why not? Makes all the sense in the world, sir, when you're talking about the odd block. Remember, the rules are out the window when you get into the odd block.
When you put your fedora on, you step into a strange place.
Yes. The one could argue this whole show is strange, but definitely this portion is very high in the strange quotient.
That's what people want.
Yes, people clearly like the strange. More strange, please. They all keep writing in for on the show. All right. And next up, we have the good old diamonds. These are, of course, ticker symbol DIA, closing today at about 150, 149.5 or so. They're in the old diamonds. What we saw today was a pretty sizable, a lot of paper across the board here in the diamonds. This is clearly a very active product, averaged in over 50,000 contracts a day, doing double that today, doing about 110,000, and a good chunk of that coming in these ACH 157s. Someone came in and looks like they blasted out a bunch of them for a nickel, nearly 15,000 times, with open interest of 18,000. So much open interest hitting such a crappy bid. Smells of closing, does it not, sir?
Yeah, closing for a nickel.
Yeah, always a fun and profitable venture.
I mean, it is like 14,850. It was showing hitting the bid. I would, again, checking the open interest tomorrow. Just a strange trade. Now, I believe that was like the DIA at the top of the range, like the 157. So maybe they got somebody a little bullish. And then, of course, Congress just went and rained on their parade. Because, we hit an all-time high not very long ago, right? We had that big gap on Bernanke getting cold feet. Yeah, we were trading 157 in there. So, I think he got the gap. He's like, woohoo! And now he's just, whoever that is just crushed into just little particles and dustbins.
Yeah, this is the giving up the ghost trade right here. Yeah, this is definitely a giving up the ghost trade. This guy is broken and sad and alone, and maybe his risk manager is saying, get the last scraps off the table that you possibly can. Clearly, this guy didn't listen to Uncle Mike Tucson on our earlier show when he said selling the highs is the best trade you ever could do. So this guy clearly didn't listen. He bought the highs, and now he is reaping that whirlwind, as they say. So yeah, a very, very bullish person giving up the old ghost here in the diamonds. Kind of. You feel bad for this guy, but it's kind of hard not to feel too bad for him because it was such a, shall we say, outlandish and outlier type trade.
Now, it could be he might have sold stock against these, and now he's just closing the whole thing out at the bottom. Boom, boom. Possible, right? Bought calls earlier, sold stock. Now he's buying all the stock back, 8 handles lower. These calls aren't worth anything, and he's just totally unwinding the whole banana. That is possible. I didn't see that.
Let's hope for his sake.
Yes.
Let's just assume that the genius aspect of the trade went unsung. We'll leave it at that. This guy is much more savvy than we're giving him credit for, and he's actually sitting there counting all of his millions right now. We'll just leave it at that. And I think move on to the name that is, of course, the royalty shares for Andrew's favorite program from his childhood, Mr. Ed. This is ticker symbol ED. ED, of course, Consolidated Edison. And they closed today $54.63. This is the name that, for all of the noise about this name we hear every now and then, and all the the notoriety this name has in general, doesn't really do much from an options perspective. Doing about 800 contracts a day, doing a whopping 4,000 today. So big paper coming in the old Ed, in the old Mr. Ed royalty shares. And what we saw today was a funky little put spread taking up about 1,000 or so of that contract, so about 25% of the old ADV. We saw the ACH 52 half puts. Someone came in buying nearly 500 of those and sold the ACH 55 calls. Actually, I'm sorry, it wasn't a put spread. It was one of these Andrew special funky risk reversal combos. He sold the ACH 55 calls for a 25-cent credit. Did all of that around 500 or so times. Open interest on these strikes are pretty nominal, 100 some odd and 600 or so contracts respectively. Went up scattershot, so it wasn't like one massive block coming and sweeping across the exchanges. And so interesting one here to watch. Senior Andrew, I'm assuming you didn't see any stock going up with this bad boy.
No, and it went up to like little pieces, but it looked like it was like a 400 lot. It didn't go up marked as a spread, even though it all went up on like one exchange. It all went up within a few minutes of each other. It had all the look of a spread, but didn't quite get done that way. But, it's like it's a collar, buying puts, selling calls. Selling the 55 strike is pretty aggressive. And it was pretty much the low of the day. So either somebody was looking for a way to buy stock short term, or they're getting really short at kind of the bottom today. So
yeah, I was going to say if they're collaring,
and the puts immediately went offered after they paid 20. It was like, okay, they paid 20, then whoop, they're at 15. So
another good feeling.
Yes, that's always makes you feel warm and fuzzy inside.
Makes you feel like the market really loves you.
Exactly. I'm going to buy a lot of these, and then they'll give me more. All I want, a nickel lower.
Yeah, you're right. This guy, looks clearly like an underlying holder putting on a collar. If he is that guy, if he is collaring, he picked an odd time to do it. He's really collaring at the lows here. So
right.
This thing was trading 63 not that long ago, and it recently was trading over at 60 handle again. So he's coming on the lower end of that range to lock in that collar. Maybe he's getting that tap on the shoulder as well, saying you got to lock down some of this downside here in all your massive ed position.
Right, and I think maybe it's just because the stock's at the bottom of the 52-week range. Everybody thinks these dividend stocks aren't going to be what they were, and they want to just get through this whole congressional, flim-flam without getting taken to the cleaners. So kind of what it feels like.
I think he's just realizing the Mr. Ed Gravy train has finally run its course, and those royalties are not coming in anymore, and so he needs to look elsewhere.
I guess so.
That's a very dated reference.
He needs a new gig.
That's dated even for Alex. That's a very dated reference. None of our audience are going to get that one. All right, and that is going to do it for the old odd block. And speaking of Alex, it's time to keep on rolling right on into his portion of the show, a.k.a. the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is the old Xpress Block, the portion of the show where Alex takes us on a guided, behind-the-scenes private tour of the OX World HQ. And today, Alex, you said you saw a lot of two-sided paper and a lot of people lighting up the old tape in Tesla. Take us deeper into those wells, if you will, sir.
Yeah, it was an unusual day from the standpoint of two-sided paper. I mean, we do have a core base of people who are active, aggressive traders, but normally it's more buy something, hold it for a couple days, and then exit. Today we had just kind of a lopsided volume of two-sided paper, and it was a funny news day. As we said earlier, the president tried to talk the market down, and then the Wall Street Journal reported a shooting at the Capitol today, which I thought would take the market lower, and actually the market rallied back.
Yeah, the market rallied during the shooting noise. That was probably one of the stranger moments of the day for me.
Yeah. So go figure. I think there's somewhat of a thick-skinned character.
Maybe that tells you the public's perception of Congress right now. They're shooting them. Oh, rally.
Okay, let's be careful now. I don't want guys with black suits and earpieces in here.
Some gallows humor on the old Xpress Block.
Yeah. So, interestingly enough, I mean, the stuff that was trading was the E-mini. When I queried the futures desk, they said there was just a ton of E-mini round trip business today. Tesla, we talked about. Apple, $10, $12 ranges, lots of trading opportunities. Facebook had it's kind of its first big down day in a bit. Not that it's been parabolic up. And Lulu, the stealth rally in Lulu continues. And Lulu, I think for a while was kind of dead money in a number of the accounts up here, but it's getting back up to a level here where it's becoming kind of the market leader in all of this. Did a lot of VIX today. We're doing a lot of VIX lately, and that's both hedge paper and spec paper. And overall, the guys were busy all day. I mean, the I should be careful here. The men and ladies on the customer desks we're busy all day today. So it's kind of a constant flow of paper. And it's going to be interesting going into this weekend to see what comes out of Washington. I think, earnings start next week, but I kind of think nobody cares. And all eyes are going to be continued watching what comes out of D.C.
You mentioned VIX. We didn't really touch on that at the top of the show, but on our last episode, of course, we kind of joked about how everyone was loading up on SPY and SPX and then turning around and selling all the inflated premium that they were causing in the VIX and writing calls to the upside. Of course, the literal downside of that in many cases is that VIX on days like today and others, it doesn't really look back. It just shoots north. So I wonder if all those guys who were hedging some of their SPX premium, some of the SPX exposure with VIX, short VIX, if they had a chance to cover or if they really got taken to the cleaners in this post-meltdown, post-shutdown explosion of vol that we've been seeing. Probably I have to wager a lot of them the latter in that case. So interesting stuff to keep an eye on. We'll probably keep an eye on that into our next show and see if we can dig up some more data on that. But now it's time to keep on rolling into my own favorite portion of the show. Don't tell Alex, don't tell Tusa. Their parts are great too, but this is my favorite part of the show because it's your part of the show. It is, of course, the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, we have some great questions coming in today. We have a nice little one, and then one that only can be described as the mother of all listener mail. I'm not sure how much of that one we're going to have time to get to. We'll do our best, but we'll start off with the quick one and go from there. This was a question/comment from Ian, or Mategia, however you want to pronounce that, on Twitter. And he writes, all right, you guys, great show. Could you please mention the date of the show at the start? The intros, trading block, vol, etc. But you say that, but there's no context around the date. Thank you. I love all the Twitter abbreviations, getting through all that stuff. But that's a great question, Mr. Mategia, and, we get that a lot. But not as often as you might think. And one of the reasons we actually do that by design is because they said the audience is really growing substantially for this show and for the network as a whole. But we have a lot of people coming in and discovering the show as new listeners and then going back to archived episodes. So on one sense, I could see where you might want the date. But on the other hand, you don't want people coming in and tuning in saying, oh, this is all dated stuff. We're not going to listen to it. When a significant portion of the show, particularly the education stuff, the mail stuff, all the stuff we talk about is evergreen. And you want to make sure that they come in and listen to those. So we haven't done that for the simple reason we know someone coming in, listening to the top of the show and saying, oh, well, this is from, June of 2011. I'm not going to listen to this episode when there still are a lot of great, interesting nuggets in there, aside from the timely stuff that we want you guys to check out. But that said, I could see some of the value of you guys knowing exactly what we're talking about. Just for reference, we tape every Monday and every Thursday here on this program. The shows come out every Tuesday and every Friday. So that should give you a little bit more frame of reference of what days we're talking about. And I'll be sure to keep that in mind for future episodes and see if I could smatter some dates through so you guys know exactly what and when we're actually talking about. All right, next up is the mega question, I guess you can call it. I don't know how much we're going to have a chance to get to. Maybe we can break this one up and take about some other pieces and other shows. But this question is from Richard D., and he writes, Mark and team, first, let me say I love your podcast. Well, thank you, Richard. He goes on to say, I'll even listen to outdated episodes of the Option Block because in addition to the knowledge I can gain, you guys also have a great rapport with one another and are very humorous. Well, thank you again. And this gets back to what I was saying before with Ian's tweet, that we have a lot of people coming in and doing that. So sometimes adding the dates could throw them off a little bit. Richard goes on to say, great job starting all this, Mark. I wish you continued success. Well, thank you very much. Now for my post. He says, I've been trading options as a retail investor for about 2 years now. It's been an interesting experience. I generally trade vertical spreads in lieu of stock positions. Well, ballyhoo for you, you've been listening to this show then. Or occasional directional calendars or diagonals. Although I have had some success with verticals, I don't feel I am optimizing my positions. For example, I am not always sure how far out to make the short position or keep the short closer to the long and trade more quantity. Also, sometimes I put on verticals that are 3 to 4 months to expiration only to find the underlying making a large move in my direction, but the vertical not performing nearly as well. This is not due to a major volatility change, but more because it seems like they are so far out from expiration. I'm also not clear when a vertical is a, quote, good deal versus just going long the call or put. I've heard you comment many times about skew and the out-of-money options making options look attractive. For example, I think in this episode you mentioned Facebook. I have still not gotten to the point where I could recognize how to identify these. So my questions are, and then he goes on to have a bunch of individual questions. Maybe we'll try to take them one at a time. We'll start with number one here and see how much we get to. He writes, could you give an example using, let's say, Facebook, Yahoo, or Tesla on what a vertical looked like in the past and one that looks more attractive now? That gets back to what we've been saying on some of our recent episodes. Earlier years in the past in this show, we talked about Apple having that aggressive upside call skew. We've seen that transition more to names like Facebook now and even Tesla to a degree. I don't have any specific examples at hand. Maybe Andrew has one or two queued up that he's talked to with some of his mentees that he could walk you through. But in general, what we're talking about here is just the extremity of that wing being so severe. And usually it's one of those things kind of like the old definition of pornography. You can't really define it, but you know it when you see it. There's no quantity that says, wow, this is a ridiculously fantastic vertical spread. But if you're used to trading some verticals, you can see, wow, I'm usually used to getting into a spread with this percentage moneyness or in the moneyness or out of the moneyness for around these volatility levels and for around this net debit or credit for a stock of this price. And wow, I can do it for 2/3 of that price, or I can do it for half that price because of this call skew. It's one of those very much you know it when you see it type things, which is why it's so hard to come out and quantify off the top of my head. That said, Mr. Andrew, you have anything lurking in your little cookbook over there, your little textbook that could exemplify some of these upside call skew examples here for our friend Mr. Richard D?
Like even right now, Yahoo. Okay, so Yahoo was like a stock that pulled back today, and Yahoo now has an upside call skew, which it never did. Basically, everybody just thought the stock sucked and nobody wanted to buy it, and they just sold calls against it. Now, because this Alibaba thing, you buy a call spread to alleviate the risk of a volatility change. So that's number one. So if you think volatility is going to change and mostly it's going to drop, that's why you buy call spreads, because it alleviates the risk. You don't have as much delta, but then what you realize is when you just buy calls and the volatility compresses, you don't have as many deltas as you thought anyway. So examples are like Facebook or Yahoo right now, looking, let's say, at even November options, because that's sort of where the deal, where this Alibaba is going to go public, and God knows what it's going to be worth, right? You get a chance to have, eBay or Facebook or something, whatever Alibaba is, they're an exchange of goods. I think it's an eBay type thing in China. And Yahoo owns a big piece, so Yahoo's basically ran from $20 to 33 or 34 on that IPO as they keep popping the value up. So if you want volatility exposure, you just buy a call. If you don't want volatility exposure, you buy a vertical call spread. Usually, how far do I set the strikes? I generally do this. You set a strike from where you are, and you sell the strike where you think it's going to go over that time period. So if you're going to buy a call spread, you have to at least think about it. And it's similar to how kind of Mike trades his, the spreads that he has when he's writing calls against a long. You got to have, there's some expectation of where the name is going to go if you're going to trade the option. You just can't go, lunk it and just pick anything willy-nilly. So that helps me kind of set up the spread, and then you see what the market price is, right? Is it worth selling that extra call? Is there any exposure? Is there enough exposure to volatility to make it worthwhile? One thing I like to do too, buying call spreads, is generally I like stocks that have increasing realized volatility. Anytime I'm going to spend any money on an option, I want to make sure the stock is moving somewhat, and it needs to be moving. Kind of like that call spread has to fall sort of within a standard deviation of the current realized volatility. So, do you buy a call spread on Johnson & Johnson, the thing never moves. Even though it might go up like 4% a year, you buy a call spread, you're never going to make any money. So you want to keep that in mind. So a lot of times it's the difference between, do I buy a call spread that's out of the money because I think the stock's going up, or do I sell a put spread that's out of the money for essentially the same kind of risk reward, but the stock doesn't have to do anything. So it's definitely at least for me, if you're going to trade call spreads, if you're especially going to buy them, you have to have some sort of inkling of what's going on with the underlying volatility is where's the direction, because you could get there and then not end up making any money. So, and as far as term goes, and it depends on your target and trying to set up what's reasonable, like within a standard deviation over the time frame when you buy your spread. So, I know that's a lot of different pieces, but
there's a lot of different pieces of this question, and we're not going to get to all of it.
We have whole courses.
Yes, there are many courses that could walk you through this. Really quick, we'll do one more part of it here. Number 2 question. He goes on to ask, could you talk about tools that can help identify when verticals or even time spreads look favorable? Having a full-time job, not having the money or time for a coach makes these options out of the question. Now, this being said, the spread may look favorable, but unless you hold it to expiration, it seems your short could remain at that skew quite a long time or even become more skewed. So I'm not sure this is a great vertical strategy, but I guess you'll let me know. Tools for the retail investor could also be a good idea for a show, either bootcamp or another one. Thanks for the suggestions, Richard. The tools question, I know Chusaw's champing at the bits. I'll let you dive into that one. But really quick, I just want to say, that's actually not the case for a lot of these things we're talking about here. Some people call them reverse skew. We just call it, aggressive bid upside call skew, whatever you want to call it. These are usually very short-term phenomenon. They're usually, like we talked about, Apple is usually going into Apple earnings, and then the call skew would come off again once the earnings happen. In Facebook, it's lasted a little bit longer, but it's usually you don't see this going on for months upon months upon months. Usually it's around the lead up to some specific event, typically earnings or some other announcement, and people are just bidding these things up like crazy. You're not going to see this willy-nilly typically in a lot of names, and if you do see it, you want to act on it because you're not going to have to hold it to expiration. That's what makes these things so great. You're going to leg into a vertical at a level you're probably not going to be able to get otherwise, and then watch that upside call wing start to deflate after the anticipation or whatever it is starts coming off, and you're going to see that spread widen out in your favor dramatically. And so that's why these are great, because you typically don't have to hold them that long. They're very, very near term, very short duration type trades. So that said, I think if you adjust your time horizon, it might make it a little bit easier to understand how these trades work. Now, Mr. Tusaw, I know you're dying to get in on this one, so what do you have to say here for our friend Richard D?
Anyway, Richard, a couple things that you can do for looking for tools. There's a variety of tools on the Options Express website that Alex can tell you about to find a specific spread. There's ones on there with which you can put in specific criteria for where you would want the stock to be, what you're looking for the volatility to be, and that type of thing for an attractive vertical. So I would yield to Alex in terms of the tools. What I like to do personally when I'm looking as to whether or not to do a vertical spread or a calendar spread, I personally like to focus more on ETFs or the indices themselves. And if I see what I like on an indice, I'll either say, okay, this would be a good market for a vertical spread. And if it's not what I feel is a good market for a vertical spread, then I would say, okay, this is more of a market for a calendar spread of some sort. For those of you that were listening to the show a couple months back with the VIX as low as it was, I was really touting the calendar spread a lot. And that's what I was doing in a lot of ways. Now, keep in mind, it's one piece to a bigger puzzle with what we're doing for clients. But what I would focus on is for looking for specific tools for verticals. If you want to be a total vertical guy, then I would suggest going into the Options Express website and seeing what you have for that. If you do want to delve into the diagonal or calendar world more frequently, then I think what you need to do is set up a set of parameters that you like to see, and then when you actually see it, that's when you execute, okay, I'm looking at the Russell 2000 or RUT or SPX or whatever you like to trade, and say, okay, with the VIX a little bit higher now, it might make more sense to do an out-of-the-money vertical or to sell an out-of-the-money vertical spread in some way, shape, or form, as opposed to doing an at-the-money calendar, just because like kind of what Andrew was talking about at the beginning of the show, it's probably not the ideal time to be short gamma right now if you are trying to be a totally neutral trader.
Mr. Alex, anything to add here for our friend Richard D?
Yeah, and Mike's comment about maximizing the tools of your broker's website. We obviously don't know where this listener trades, but wherever you are trading, and hopefully you're trading here, there are tools that will help you do that. But one point that the listener made is he's got a day job and doesn't have a lot of resources. And being brutally candid, it's going to be real hard to find those trades if you've got a day job and don't have a lot of resources. Because, as you pointed out, Mark, those are trades that exist for brief periods of time. And they are opportunities that lots of people are looking for and lots of people will try to pursue. So, candidly, one of the things in options is setting expectations. And a couple of points I'll make to the listener. Your point about spread trading, you got to wait till expiration, is spot on. And that's the thing that for many traders just turns them off about spreads. You buy a spread, the underlying does exactly what you wanted. It's a $5 spread, and it's still trading for 80 cents, and you got to wait to expiration week to get it back. So, number one, please be aware of that in spread trading. There is no silver bullet. But number two, if you're trying to find vol skew trades, it's very tough if you've got a day job.
All right, fortunately, Richard, that's all the time we have for this question. We appreciate the epic questions. Keep them coming. We only had a chance to get to a couple of them. Maybe we can have some of our guys answer some of them off the air for you or something like that. Or, of course, you can contact our friends over at Option Pit or Uncle Mike over there at RCM and let them maybe walk you through some of this stuff. Or, of course, we have a wide variety of free information on the optionsinsider.com. And if you're trading over there at OX, then click on the education tab because they have a bunch of great stuff. And as Uncle Mike and Alex mentioned, a lot of great tools to help you identify those. That's one of the reasons, quite frankly, Richard, that we do the odd block and we talk about so much unusual activity on the website. It's because we're trying to highlight some of those opportunities for you guys. And a lot of them come from someone coming in and scooping up a bunch of upside call skew and out of the money calls and random XYZ name. And when those happens, that creates a very, very near-term, short-duration distortion that you as a listener can take advantage of. Sometimes, they're not always the most timely alerts. Sometimes you guys have some delays in when you can get to them and how you can trade them. So it could be hard for you to implement those, but that at least gives you some guidance and some names that could be exhibiting that in the near term, and then you can go do your own research after your work, and maybe you look at a spread and you work some limits and see what comes your way. And that's probably a good way to cut your teeth on that stuff. Unfortunately, that's all the time we have for the old mail block. And essentially, that's all the time we have for this program because we're beyond our allotted time. So we'll do really quick around the block, which I think all of us can pretty much say is watch Washington. Because there's not much else going on. Watch your short gamma, and then watch Washington. And then before we go, really quick, let me catch up with each of my cohorts, my partners in crime, to see what they have cooking that may interest you, the listener. Starting off with you, Mr. Alex, what is coming up in the land of OX?
Okay, first and foremost, the $150 Amazon gift card to a funded account that trades. That offer has been extended all the way into 2014. Come to the site and see the details. Monday, October 7th, part of our continuing education foundation pouring class, the intro class into long puts. Tuesday, October 8th, Marty Kearney, my gray-haired compadre from the CBOE, doing a butterflies webinar. And Wednesday, the 9th, we're doing an intro to futures trading here at OX, and then after the close, I'm doing the Idea Hub.
Busy days for you, Mr. Viceroy, but thank you for taking some time on the show. And if you do want to take advantage of that offer, it's really easy to find. Just surf on over to optionsexpress.com. You'll see it right there on the homepage. Click on the Learn More, get a $150 gift card. Essentially, you deposit $1,000, make a couple of trades, you get 15% of that back, $150 on an Amazon gift card. Not a bad deal. And let them know when you sign up for that account somewhere, or when you're talking to people or whatever it may be, that the Option Block sent you. We like to let people know when they're coming from our show. They like to hear that over there at OX. All right. And next up, Mr. Giovinazzi, what is cooking in the land of the pit?
Well, that's an excellent question. I wish I knew, but I do have something. I know you were shocked. On Tuesday, I'm going to be doing a webinar. You're going to be able to surf on over to our website probably tomorrow for it, or Saturday. I'll be doing a webinar with Orats and Ackman on their 3D option product, which is actually not very expensive if you're looking for skew and stuff like that. But basically how to use it, how to use it when market conditions are changing. And it's a volatility based product. And basically it helps customers essentially see what our other that other viewer was looking for. You know, when are these volatilities higher? When are they lower? And answers information like that. And also, it's a nice way to look at when the market's turning. So that will be 4:30 on Tuesday the 8th. It'll be a free webinar kind of demonstrating how to look at the market like that.
Thank you for that, sir. And let me also make a plug for you guys and for us as well. By the time you guys are listening to this tomorrow, on Friday the 4th, both Mark and myself will be appearing at the All-Stars of Options Expo over here in Chicago. So if you're going to be in Chicago tomorrow or today when you're listening to this on the 4th, you want to swing by McCormick Place. I believe Mark's talking in the morning about Greeks, and I'll be talking a little bit later on in the afternoon. I believe I'm talking about collars. So if you want to check that out, if you're already heading on down there, we'd love to see you. Come on up, let us know you listen to the Option Block. We'd love to hear from you guys. And Mr. Tusaw, what is cooking? What is coming up in the land of the RCM webinar train?
Funny you said cooking, because Dan Cook did our webinar last night, because by the time you're hearing the show, the recording of it will be the next day on October 4th. It had a great webinar last night, but this coming week, we're actually taking a week off, and then the week after that is to be determined. We have a few things lined up, but we're going to keep you in suspense. And then the final thing I'd like to say to everybody is Happy National CB Day for October 4th.
TBD, my favorite webinar subject. I always tune into those.
Yes.
All right, thank you for that, Uncle Mike. And, of course, thank you to all of you guys out there for tuning in and for writing such great and detailed questions. Keep it up. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.